calls of the daytime. Joey, I begin with you. Deere, initiated by Canaccord, price target 530. Net's near 30% higher from where it is now. Let's start there. You own that personally and in the Joe T.
I've actually owned Deere longer than it's been in the Joe T. I've owned Deere since 2021 on several different theories. Number one being that we would see agriculture have this significant positive cycle. And then in addition to that, you had the replacement cycle for farm equipment, and we're actually seeing the reality of that. So Deere has been a strong performer. The revenue growth is accelerating, 32% in the last year versus 11% over the last 3 years. It's a name that I feel good about. Is the momentum getting somewhat stretched? Yes, in fact, it is. And a lot of that, the resolution of that will come where agriculture prices go, which right now are on the decline.
Weiss, you just sold it.
Yep.
Did you sell it too early? I know you made money in it.
Yeah, good money.
You didn't own it that long, but did you sell it too early?
No. Look, you're seeing inventories, and they said this in the last quarter, build at the dealerships. The cost of buying a new tractor, just look where rates are, right? Look at what costs to lease a car or buy a car to finance it. You're seeing agricultural prices come down. So the farmer's getting squeezed from a lower price, while at the same time getting squeezed on what they have to pay for new tractors. I think long term, it's a great story. I don't view it as compellingly cheap at this level. It'll get there again, and I'll buy it again.
Corteva is another one as part of this call, Joe. Speaking of farming stocks, $75 is the price target. That's a 31% upside. You own that in the T.
That's a stretch. So Corteva was added in October of last year. You always ask yourself when you have two companies that you own in similar industries, and keep in mind Corteva is in the materials sector, Deere is in the industrial sector, but you kind of compare the two. I'm less excited about Corteva. This is a company that is expensive relative to Deere. It trades at 27 times. And the revenue growth really isn't there, Scott. The revenue growth in the last year is 6%. Over the last 3 years, it's 8%. It's really agriculture specific. You have to tell me that the biotech story in agriculture is going to take hold and be a catalyst for me to get excited that Corteva is going to reach that mid-70s price target. That's really a stretch.
Okay, so Amy, Regeneron gets a call today, downgraded.
Yeah.
At Canaccord, price target gets cut to 720 from 953. What do you think? You own this,
I
right?
own it, yes. And the stock's been down 10% in the last 24 hours on delay in the approval of their high-dose Eylea. But I think this is a fantastic franchise, and this is a really good opportunity to get in. Dupixent's still very strong. They have double-digit number of oncology drugs and trials. It's just a great science company.
Joe T in the T.
It's been there since January of 2022, so we have a decent profit on it. I agree with Amy. This is a quality company. It trades at 17 times. And in the FDA's submittal, this really is more of a manufacturing issue.
It's a third-party filler issue.
It's not really safety or efficacy.
Right.
So this is something that's correctable. It's just about managing time and defending market share, which Regeneron is a leader in eye therapy drugs.
So Nike gets a call too. The price target gets cut to 146 from 152 at JP Morgan. It's Matt Boss. He's the top-ranked retail analyst on Wall Street. Amy, this is yours. Long-term holding, you've had it.
Yep.
What do we think about this?
Look, they're going to report tomorrow night. I have no idea what the quarter is going to be. There's been a lot of bad news in the space, Foot Locker, et cetera. I think Nike is, though, a long-term core holding. It's cheap relative to its own history. It's still really well positioned. I think going direct will help their margins, and that's their objective right now.
Joe, you own it too?
I do. Terrible purchase at the end of April. It's been straight down ever since. Inventory issues persist for this company. We've had multiple price downgrades. They're going to really have to prove their story in earnings tomorrow to see this stock regain some positive momentum. I don't see it.
You have a different take?
What they report tomorrow, I don't know. I mean, but there has been a lot of negative news in the sector, so I don't think expectations are particularly high. I think more people are short than long, which could get a short squeeze as a result. But from a longer-term perspective, what they're doing to revamp their inventory management, their partnership with athletes, I think this is the name to own in the space.
Does it deserve a well above market multiple that it has right now?
Well, I think it's trading around 28 times.
Forward 31.
Well, it depends on where your earnings estimates are. So
okay, even 28.
No, it could come down, but I think earnings have been depressed. They have been missing. So I don't expect anything near term, but I do think longer term they're positioned to take out their middlemen, and I think longer term that will be good for the stock.
Still like Lululemon.
I think part of the issue with
if
Foot Locker, by the way, is if you go to a Foot Locker store, is that Nike has de-emphasized Foot Locker. So the selection is just not there. They've given it to Dick's, which is one of the reasons I like them and why I own that, because it's a standalone franchise. It's not being disintermediated as much by Amazon as others are.